19th of April 2022. I haven't done a video for a little while, which is showing a complete lack of consistency and discipline on my behalf. So, yeah, something we're still got to keep working on. This video is, I want to do a review of the 30-day kind of silly challenge I set for myself. And I think it was started on the 10th of March. So that finished roughly 10th of April. Now, I didn't actually get 30 days worth of trades, which would be roughly 20 odd. I only ended up with about exactly 13. So yeah, got a bit fed up with the markets and everything sort of towards the end. Interestingly enough, though, there's some really interesting, good results, some good opportunities that have come out of this. Even though the actual results weren't that great, it was actually showed some really key insights. So yeah, big thing for me is to you keep trying different things, even on tiny amounts. I was literally trading one share on these trades, but it actually put the actual cash in, so you can see what the actual results were, rather than sort of reading and looking at other people's comments and opinions. Test your own stuff, test your own sort of theories. Where can you improve? And it's certainly shown a few things to me. So these are the actual results. 13 trades, 7 wins, 6 losses. Average was 14.4%, average loss 12.2%. I'm not too concerned with this average loss figure because there was 2 or 3 trades where I literally just didn't bother closing off the loss. Literally, I've traded one. Sorry, there was one trade in particular I didn't bother closing off the loss, which will come to JBHT. So I was trading one share at a $200 stock. I really wasn't sort of too fast where I took the loss. So let's go through some of the trades and some of the key learnings that have come out from there. The first one is, with those stats, that would show that I'd actually make a slight profit. And, it's been a pretty tough market, so I'm actually sort of overall happy with those stats. However, my actual cash account lost money for the period. The reason for that is some of the trades I put on my normal position size because I had some misplaced confidence that those trades in particular were going to work out. Now, those trades were yesterday's leaders. So AMD and DDOG in particular. So AMD, semiconductor stock, it was very kind to me here. I bought it here and it's just been slammed. Interestingly, I think, so I bought it this day here, reclaimed the 200-day moving average. The Nasdaq I thought was looking okay. I thought it was sort of bottoming out, and nothing of the sort. So yeah, key point there is what I'm doing is the actual overall chart and the entry. I was not that unhappy with it. And I've discussed in previous videos, it might be better to buy a rising 50-day moving average as per Mark Minervini, but sometimes it's okay if you're sort of seeing a stock wedge between the 50 and 200. Anyway, bought it, jumped the gun, lost money. Now you see this is the industry group ranking on MarketSmith. Basically, I was buying a stock in a very weak sector. And that's been a consistent theme that's come up when where I've tended to lose money is in the weak sectors, not the strong sectors. Anyway, so the other one I said was DDOG. Similar story, bought here, not unhappy with that trade, to tell you the truth. A big shakeout here. Thought it was bottoming, sort of reclaiming the 200-day moving average. 50-day was sort of looking okay at that point. In a vacuum, I'm actually not unhappy with the entry there. But again, look at the high growth tech software stuff is just really not the place to be at the moment. So again, I've bought a decent looking chart in a poor sector. and the pull sector is 1. So I read, I think it's one of the cancelling things, that 50% of a stock's move is will be attributed to the sector that it's in. So no matter how good the stock or chart is, if it's in a weak sector, you're really pushing shit uphill. So yeah, the first lesson I've taken out here is these were sort of, those two in particular were sort of yesterday's leaders, made money on them previously, had a soft spot for them, and I thought I'd sort of let go, but obviously hadn't, and I paid the price good and proper. Anyway, so I've got this narrative bias, this confirmation bias. I've got to really try and free myself of some of those two biases, I think. The next one was, next learning is, for me, pullback buying really works. The first two trades I did of this challenge were OVV, very similar looking charts. Broke out, good volume, held it, bought it around here, got stopped out. Actually got stopped out on next dividend day to rub salt into the wounds. Sometimes stocks just can sell just because it's the next dividend, so charts don't really give you that information. So buying these sort of BGU breakaway type stocks works very well in very strong markets. As I found out recently, in not so strong markets, they're just fraught with danger. Whereas now I'm sort of really pivoted towards looking to buy where people are sort of vomiting out the stock. So yeah, you can imagine all the people that were thought, right, it's broken out of this base here, away it goes, textbook sort of stuff, and then it just gets slammed. The time to be buying it was when everyone was getting stopped out. Tagged the 50-day moving average on upside reversals sort of two of those days here. That was the time to be buying it. And if I had, so that was a $43.12, that's a 54, that's over 20%. If I'd bought it when I really should have. Next one, rig. Righto. Again, breakout. Market Smith is saying to buy. Bought it around here. It just got totally slammed. Obviously, a bit of a small stock here. Not sure I really should have ever been buying this, but maybe here on this sort of upside reversal day, as it sort of recovered the 21-day moving average, or maybe even later here as it sort of got close to the 50-day, around here somewhere. Clearly around here, the stock was just getting vomited out. And I'm using that term deliberately. I know it's a bit gross, but just to reinforce my point where all these trades just going, screw this, they've got to get stopped out. And this was there's an example here where stop losses, a percentage figure can get, you might think you can put a certain amount of percent stop loss in, but it can get blown out you very easily. This was something like a 16% loss here. So yeah, for me, buying on pullbacks works. So identify strong stocks, strong sectors, but the stock's going through a temporary pullback, preferably to something like a 21-day, 50-day, or 200-day moving average on an upside reversal day, and back to sort of natural previous resistance. So yeah, that's the next lesson. The next one is really try and focus on the strongest sectors only. So if I did that, I actually would have made much better money. So a few more examples where I've lost money. JBHT. Right, bought it here. I didn't think that was a bad entry actually. Been basing for quite a while. Big breakout here, waited for it, was patient, waited for it to come back to me. Did that, and then still lost money, ended up selling it here. Normally should have been selling here. Now, I say the chart looks good. Where I've gone wrong is I bought into yet again a weak sector. Trucking and transportation is right down the bottom. To a lesser extent, Cabot, pretty low ranked sector. I think I can't remember exactly. I bought around here somewhere. Pull back to the 21-day moving average, and then it sort of just flopped around from there. So no real sort of power behind this chart, behind this name. Took a small loss on that one. That wasn't too bad. CWST. Again, big move, pull back, 21-day moving average, upside reversal day. Did I buy it? Not a disaster, and that might be just pure luck, but whatever the sector is, pollution control, that's way down the list. So should I really even be bothering with this stock here, given its low ranking? Yeah, probably not. But again, like if you're just looking at the chart in itself, it doesn't look too bad. So yeah. Whereas where I made really good money on the trades that worked out well, were just getting a list up. Righto, HES. Industry rank 4 out of 197. And now this one, upside reversal day at the 50-day moving average. People were buying here, no doubt just getting a bit of a vomit out here. People panicking around the 50-day moving average. And the upside reversal day showed me that there was buying support there in behind after the selling was done. So yeah, bought it, gone from 92, 94, 116. Great move. ARLP. Bought it 15th to the 3rd, so that would be, bang here. And it looked like a sort of, textbook-wise at least, an ugly entry, like a bit of a squat. People would be buying it here, breakout to all-time highs, and then they just get slammed, and I'm buying. Another great mover there, $14.20 to $17.34. Next one, AIR. Now, I probably need to eat a bit of humble pie on this one. I'm not sure I should be taking this. It's not a lowly ranked sector, but not top quartile either. Bought this 18th of March. Not quite sure why I'd buy it there. Anyway, I did. Anyway, what's that? Up just under 10%. A bit of it, sorry. Not a bad one. Google, this is where I stuffed it up. Out of favour sector, bought it here is reclaiming 200. You can see the commonality between AMD DDOG and Google there. I think the individual charts weren't too bad, but the sector is just on the nose. Anyway, CDEV, speed this up a bit. This has been a good one. 23rd of the 3rd. Order here has recovered the 50-day moving average after a really nice big vomit there. Yeah, that's gone all right, hasn't it? Yep. Weatherford, another good one. That was a busy day for me, wasn't it? Yeah, bought it here, it's got vomited out. Been a cracker. Again, just trying to hunt for those areas where people are vomiting the stock. People are being sort of told to buy it here, that's where the system is. Yeah, bought it here, and yeah, that's been a really good one. Look at it, it's just powered away. Great sector. Ranked 21 out of 197. What else have we got? And ExxonMobil. 29th of the 3rd. I kind of figured here, a bit of an upside reversal. Bit shaky looking here, but holding that 21-day moving average. Anyway, that's sort of moving along quite nicely. Better time to be buying it would have been here as it sort of held that 21-day moving average. It definitely would have looked a bit on the nose at that time. But yeah, just buying when everyone else is a bit fearful, when everyone else is sort of vomiting the stock, when the chart's not looking its cleanest, but otherwise the chart is actually performing really well. I mean, look, we're coming out of a long base, pushed up, almost a VBR sort of thing. Anyway, quick consolidation, and then back down it goes. So anyway, just to put on the bullshit hat for a moment, I thought, okay, well, what happens if I made some adjustments for how I could have improved those trades? So if I didn't buy those breakout stocks, OVV and RIG, OVV could have been bought when I was actually sold, and RIG, so that was probably just too hard to trade, too volatile. That gives me a performance average win of 15.4, average loss of 12.8, but the win-loss ratio goes up from 8 wins versus 4 losses. And as I said before, some of those trades blew out to unnecessary losses just because I was just trading sort of one lot things just to test the system. I said, right, if every loss was capped at a maximum of 8%, so 15.4% average win, this is an 8% average loss. That really sort of improves the numbers dramatically. So here I've worked out my Kelly formula, which is the recommended. To start with, a win rate of 54%, a win-loss ratio of 1.2. So that was saying I'll put 15% of your portfolio into each trade. With just tightening up some of my metrics there, the win rate was 67%. The win-loss ratio is closer to 2, and that's which is just really quite phenomenal. So, and the Kelly formula is saying we'll put almost half your portfolio into each trade, which sounds pretty gutsy in this market. So, yeah, this next table here is showing how much 100 grand would compound out to based on this many trades and these metrics. So you can see here, if I just followed a basic system instead of losing money like I actually did, I would have actually made a bit of money, which in this market I'd actually been pretty happy with that. Tightening up my process a bit would have yielded massive results. Now, if we just wind that back a bit and put the same portfolio allocation and apply that to each of those trades, still the performance is dramatically improved. So a $13,000 return on 100 grand is obviously 13%. which in just over a month. So I should say I did the mark to market as of today for all those prices there. So yeah, I'll take that any day of the week. So yeah, really interesting process. Recommend doing it. So I'm just going to summarize again the key things I've taken out of. Let go of the biases, narrative and confirmation biases like I had at last year's winners like tech and semis. Pullback buying for me works. Just try and be patient. Stick with that. Focus on the strongest sectors. By and large, if I do that, I'm just going to eliminate the sort of more random charts out there. Yeah, I need to be more consistent. And yeah, that's the main things.